Hi guys, Phil Rogers and Lauren Hall here from Low Market Edge. Look, we just wanted to shoot a quick video. Friday afternoon, it's been another big week of changes and updates from our side and what's happening in the world, so we thought we'd reach out and just tell you a little bit about what's been happening. So obviously Superhero Friday here in the office. Look, you may have seen our post today. They're really saying a big thank you to the real superheroes in today's world, and look, that's all our friends and family working on the front line and in essential services. So we're incredibly thankful for the work that you guys do and continue to do, especially through these times. So big shout out and big love to you guys. And we thought today we'd just quickly talk about maybe some case studies and some of the conversations we've been having this week. So as we said in our update earlier in the week, we sort of had to pivot somewhat and adapt to what is the new customer needs with these changing times, and we have identified and been able to sort of innovate around moving two of our full-time staff into a customer care team within our business that's now handling the volume. We're being inundated with those calls and texts and emails from clients around some examples of probably some really extreme changes in circumstances, through hardship and deferred payments, and talking around strategies around the household and cash flow and loss of jobs and close of businesses. And there's some really tough stuff in there, and we're so incredibly grateful and thankful that we can be there for those conversations. A lot of repricing, a lot of renegotiating, a lot of taking advantage of some of the rates that have come out already, and obviously some that are still yet to come. So keeping everyone as educated, updated, informed as possible as that comes to hand, that news, and making some significant changes in their circumstances with what some of these rate drops are going to mean for them. So it's been great to have been able to do that, but obviously the volume into the hundreds of calls and emails and that we've worked through this week as a team. We just thought a couple of case studies and bring you guys up to speed with what's happening and what we're seeing and the conversations we're having. So do you maybe, Lauren, want to kick off?
Yeah, cool. Okay, awesome. We've been having a lot of conversations around definitely that affordability piece and comparing that to what customers are currently paying in rent when we look at what their new commitments are going to be around a mortgage. Really interestingly, this week I had someone say to me, I don't want to be that guy that looks back and goes, I could have had a home loan with a 2.19% interest rate. And that is the reality of a lot of what we're seeing. Even the difference, over the last 3 or 4 weeks with 2 shifts in interest rate reductions. A client I have that's just purchased, for them, those 2 shifts in interest rate means that they now have $100 a month back in their pocket more than what they had 4 weeks ago when we originally looked at their budget and did their pre-approvals. So really nice to see some of those wins in amongst some of those harder calls and clients we're working with. That affordability piece is just so strong. And for those guys, they go, hey, I don't want to be that guy that looks back and says I should have done it. So it's really great to have those kind of wins.
Yeah, it's definitely interesting to watch as this somewhat unfolds, the difference between working with 60 plus lenders, and some of the banks are passing on those rates, some aren't. In short, some have moved 80 basis points, nearly 4% on fixed rates. Some decided to pass on 0.25 in a variable instead. So, it's really just helping clients find out what has your bank done? Like, where do you sit? What does it mean? What does it mean for you? What does it mean for your household? In some of the conversations, there was a chat I had with someone today that wasn't even a client of ours. Again, we're offering this service to help wherever we can. So definitely, if you know of anyone, please call out. We're happy to help. If you're wondering where you're up to, or potentially in a conversation where they might be up to, let us know. And so in this conversation, referred through a friend of mine, we had 2 existing loans attached to 1 investment property. So at 3.5%, we were able to refix those loans. They were previously owner-occupied purpose, so we were able to negotiate with that existing bank under that purpose, which actually took that 3.5% rate down to 2.29, so saving of 1.21%. Now across the two loans of the 384,000 and the 109, which was an equity release used to purchase the second property we'll talk about, that's a saving of just short of $6,000 annually. It's $487 a month. You know, these are the difference between needing to maybe put pressure on their tenants who, you know, may not be in a position to meet full repayments at the moment because they're looking for tenant relief. And that's how the call came to me, because those clients had phone calls from both of their real estates on two of their properties for both tenants looking for relief on rental amounts. So the second property, $344,000 loan, 3.5 again on a variable into a fixed rate at 2.29, another saving of 1.21%. It's $4,000, you know, just over $4,000. It's another $346 a month. It's $833 per month in a conversation on a phone with a client that's not even ours. We've done the paperwork, we've sent in the variation, we've got the pricing approved, and these guys will have access to that rate basically overnight. You know, so it's just, these are big discussions, you know, and for a household like that with a small family, a couple of investment properties, you know, potentially tenants looking for rental relief, we know that that's going to make a world of difference to what it looks like for them going forward, at least for these next, you know, 6 to 12 months.
Yeah, absolutely. And some of these, you know, we also need to remember, just stepping back a bit there, that there's been so much change over the last 12 months to 2 years with how the banks are working and how they're lending money. And a lot of that has shifted to how they've structured their interest rates. You know, and so for some clients, they still have facilities that, you know, 2 or 3 years ago were very competitive, but now are not as competitive or aren't as offered as openly with the banks. And there's great opportunity there just to restructure some of those facilities that are now a little bit out of date. And there's some huge wins in there again. In the same example there, I've had one this week to move out of an older style facility that's not really done a lot now, moving out of a 5.3% rate, which seems crazy in our world, but you know, probably wasn't 3 or 4 years ago, to be moving down to, you know, 2.29s, 2.39 stuff. So still giving them a similar structure, still accessing their money in the same way, not a great sort of change or educational piece for the client. It's still very similar, but to be able to be putting back $9,000 or $10,000 a year back into their pocket just from understanding, hey, this is a facility that's changed in its structure and there's a better way of doing this now. So that's the cool stuff. That's the saving money, and that's what we do at the end of the day. Yeah,
and look, it's such a great feeling. We had a really good wrap up as a team via video link this afternoon between our two offices in Gold Coast and Townsville, and just sharing some of those stories, you know, and whilst there's definitely been some tough calls in there, it's been really nice to finish the week on a little bit of a high, just knowing that there's a team, we've done absolutely everything we could, you know, to provide some certainty in a very uncertain time, you know, and I think, you know, we don't know where we're headed over these next few weeks, and we're doing everything we can to just continue to be there. We're obviously not having face-to-face appointments, but very much available. You know, these calls, this work, all of this stuff we're doing, you know, these variations, these prices and the paperwork, they're not refinance. You know, they're not long conversations. They're not.
There's no costs involved.
There's no cost involved. You know, it's just, we just can't urge people enough. You know, again, reach out to your broker, reach out to your bank. You know, if you're a client of ours, get in touch. If you're not and you'd like to see what we could do to help, we'd love to help. You know, you don't have to be a client of ours. So as we move through these next few weeks, we want to try and continue to keep everyone as updated as we can. And these case studies are real life things that are happening daily here at the moment. So if you don't know, if you haven't had a look at your internet banking recently, jump on, have a look, you know, have a look at your interest rate. You know, if it doesn't have a 2 in front of it, what is, again, a very uncertain time at the moment, and we're in uncharted territories, look to take advantage of what's on offer and make sure that your household gets a little bit of relief. If it doesn't have a 2 in front of it, whether it's owner occupied or investment, you know, get on the phone. I just wish I could have, a month ago, totally different conversation. If you had a tool in front of it with an investment, I probably would have been wanting to go on a loan application with you. It just didn't exist, you know. So again, can't encourage you guys enough to get in touch, reach out. We're absolutely here to help. We'll get through these next few weeks together, and anything that we can do to assist along the way, you're only a phone call and an email away. So as always, you know, thanks for your time, and we'll be talking with
See
you
you
again
next
soon.
time.
Cheers.
Bye.
Bye.